All right, so today is Tuesday, September 8th. This is the end of the day review. And in this session every day, we discuss the performance of the adaptive entry system and what types of trades we've been tracking throughout the day. Before I get started today, I just want to share a comment from one of our members in the community. Jeremy just shared with us that he just did a 21-day look back, which is a month of trading, and he's up $30,000 after commissions starting August 10th through today. Jeremy's an active member of our live trading room, shares with us how he's doing, has some interesting insights periodically. So just want to applaud Jeremy and say thanks for being here, part of our community. So what you see in front of you is the adaptive entry system, and we're looking at a NASDAQ 100 futures chart. This methodology of the adaptive entry system is useful on any type of trading that you want to do. Doesn't matter what type of futures contract you want to trade, what kind of stock you want to trade, if you want to trade options on ETFs, if you want to trade options on the stock itself, or you want to trade options on indexes. The gist of the adaptive entry system is such that it provides for you an insight as to where the current market movement bias is headed, what direction it's headed, and it's presented to you with very, very easy to recognize and interpret signals. Red vertical bars basically are short positions. Green vertical bars are long positions. So if you're trading options, you're going to buy to open calls on green bars. If you're trading options, you're going to buy to open puts on red bars. If you're trading futures, we're going to go short on red, we're going to go long on green. The labels here, the T, the C, the M, and then T plus are the four methods of entry that the adaptive entry system provides to us. So what we do is we track those throughout the day, and we track them over various time frames. And I'm going to actually start with the averages first today. We track them over various time frames. So I'm looking at what if we were to take all signals, any signal that was presented to us of those four that I just shared with you. And I'm looking at it from 9:30 to 12, from 7 to 12, from 7 to 4, 9 to 11:30, actually starting at 3 a.m. to 4 p.m. also. So we look at a lot of different time breakdowns, and we are assessing what the average point value is on the NASDAQ 100 futures. Now we're using the NASDAQ 100 futures as our example to kind of share with our audience, our members in the live trading room, what the power of this adaptive entry system is. And then, of course, you can do your own tracking on any type of stock or index that you prefer to trade. So there's a variety of information here. We're tracking the number of negative days, meaning how many losing days have there been, and what the lowest performing day is. That would be the biggest losing day. What the average number of trades are in a day in that time frame, and what the win-loss ratio is overall. Now in the NASDAQ 100, each point is worth $20. So when you look at these numbers, for example, 42 points, almost 43 points, that's 43 times $20. So it's $860 on one contract, and each contract requires $500 of margin to trade at the broker that we trade at. So there's a lot of data here, and I don't focus on all of these data points, but we are collecting all of this data so that we can provide some really sound information to all of you and start to help guide you into which time frames are the optimum performing and which methods, whether you're trading just the trend bias signals and the continuation signals, or you're trading all signals, which of those produce the optimum level of profits. So I'm going to come back to this here in just a minute. Now Friday was the day before a long holiday weekend, so we actually closed the live trading room early. I think we closed around 1:30, but I did go back and assess what the trades were that took us up to about 3:30, which is when I typically cut it off from tracking. And so in summary, if I scroll back here, those of you who like to see everything from 7 a.m. forward, here you go. Here's 7 o'clock down to right up to 3:30. And the overall performance for Friday in the two categories that we translate into our financial forecast, which I'm going to get to, in the trend bias category, meaning we take only the trend bias trades and the continuation trades, we did 50 points of profit. And in the category where we only trade 9:30 to noon, but we take all of the signals, we actually lost 20 points. So the loss of 20 points is $400 on a single contract. The profit of 50 points, trading from 7 to 4, but only taking the two signals, not all four, is 1,000 points per contract. All right, so that's a summary, and I'm going to translate that into the trading plan here in just a moment. We're going to do that all at the same time. So now that brings us to today. All right, so here is the first trade this morning at 7 or after, and then we go all the way through 3:15. We didn't really have any other trade signals between 3:15 and 3:30. We had a few stop outs today, meaning we took 20-point losses on those trades. We had quite a few trades that gave us nice strong profits, 10 points, locked in 5 points on some. So it's been a little bit of a challenging day overall. And the challenge is derived from the fact that we had a lot of choppiness in the market, and we had substantial movements, and some of the movements were very rapid, very, very rapid after opening the position. All right, so what do I make of that? Well, if I go back and I take a look at where we were this morning, because the majority of all of the challenge was this afternoon, I take a look at where we were this morning. As of 7 o'clock, we were up 60 points because I tracked from 3 o'clock forward. We're up 60 points. As of 12:45, we were up 195 points. So that means we accumulated 135 points of profit between 7 o'clock and 12:45. Now, somewhere in there, almost every single member of our live trading room, every single member of our community hit their profit target goal. And so they would not typically have been trading in this time frame that we accumulated several full loss positions. Okay, 1, 2, 3, 4, 5, 6, 7. There were 7 full loss positions after 12:45. Okay, most people would not be trading in that time frame, and the reason is because most people in our community have a goal of somewhere between 25 to 50 points. A lot of people have a goal of 30 points of profit on an average on a daily basis. 30 points of profit is $600 of profit per contract. That's $12,000 of profit a month. It's $12,000 of profit per month on a one contract basis. So the reason I'm emphasizing this is because I track every trade because we're building a database of performance. I track every trade, whether it's a winner or a loser. And yet I know in real time, if I was just trading my own money and I was just trading for the purpose of hitting my personal profit goal, there's no way I would have been trading during this period of time that got to be so choppy and really challenging because I would have already exceeded my goal for the day. All right, so now if you're brand new, you've never heard this update before, you may not know what I'm talking about by exceeding my goal. This is the personal trading plan. This is something that we promote here at Options Moneymaker. We ask that people use the personal trading plan. We suggest strongly that they use it because when built properly, it is going to forecast for you the income that you could earn from your trading. and it's going to blend together all of your winning trades and all of your losing trades, and it's going to forecast forward what your particular 12-month income could be. Okay? Everything that's shaded in blue are days that are behind us. Those days are completed. We've already logged in and recorded our actual performance for those days. The days that are out in front of us, we are going to establish some sort of an estimate about what we think we will do, what our performance could possibly be in those future days. And I'm going to show you where we get that information from, because this right here is the most important part of your trading day, second only to trading. You want to, at the end of the day, plug in your performance, and you want to record exactly how you did so that you can have a reasonable forecast of what your income can be over the course of 12 months. Okay, so there's two different categories that I actually track in this fashion. Two categories. One is the trend bias and continuation trades only from 7 a.m. to 4 p.m. Eastern. And the second category is the 9:30 to noon category, trading all signals. Now, I'm presenting these as an example. I'm not suggesting that those are the only two methods that you're going to trade, the only two time frames you have to choose from. You can trade whatever you want. The most important part is that at the end of the day, that you plug in your performance so that you can have the trading plan tool help you know how many contracts you should be trading in the future, help you know what a reasonable forecast is going forward, what your target is on a daily basis, how many losing days it's okay to have versus how many winning days, and what your income could be. All right, so let's start with the all signals 9:30 to noon. I'm going to jump back over to our daily summary, and 9:30 to noon on Friday we were down 20 points. So on Friday we were down 20 points, and at $20 a point, that is $400. So we're going to go over and I'm going to go over here. All right. So on Friday we were down $400. Oops, that's the wrong category. So yeah, so Friday we were down $400. So it's $20 a point times 20 points, down $400, and we're trading 3 contracts. So this is miskeyed. So we're down $1,200. Waiting for the spreadsheet to catch up here. So we're trading 3 contracts. So down 20 points, and that's times $20 times 3. So we're down $1,200, and we traded 10 trades. We did 10 trades, 3 contracts per trade, so it's 30 points, or 30 contracts that we traded in total. Okay, so that was Friday. Okay, so we're going to put Friday in there. Monday was a market holiday. So there was no activity on Monday, and the way we address that in our spreadsheet is we simply put a 0 in the number of contracts. And by putting a 0 in the number of contracts, it will zero out the profit and loss field, it will zero out the total points, positive or negative, and by putting a 0 in the contracts field, it also prevents that day from factoring into our averages. We want to know what our average performance is on the days that we trade. Okay, so we've got that factored in, and now we come to today. Today we were at 25 points. Interesting, that was our plan for today. So we're at 25 points, and 25 points times $20 a point is $500 times 3 contracts. So today we made $1,500. Not $15, Mark, we made $1,500, okay? And we had 10 trades today. Again, 3 contracts per trade. So 30 trades, 30 contracts. All right, so here's the important part now. These two numbers up here, right here, 27.74 is the average profit production from our winning days. We're averaging 27.74 points a day. This is the average of our losing days, the average of our losing days. And it factors in how many losing days we have on a average per week. The plan for the personal trading plan, the forecast, is based on losing approximately 1 day every 5 trading days. That's the plan. We're realistic. We know we're going to have losing days, and so we're going to factor those in so that we are realistic about our forecast. So we're through 9.2 weeks. That's how many weeks we've been profiling this in the live trading room. But we have now an average of, well, we have 14 losing days in 9.2 weeks. So this calculation is helping me determine not only what the average losing day is, but it's factoring in a weight towards higher average because we're actually on pace to be ahead of our plan on losing days. Okay, so that makes sense to you. So this is the average basically of our losing days, which takes into account all of the losing days and takes into account the fact that we've had 14 losing days in 9.2 weeks. And then this is the average of our winning days, which takes into account the number of winning days we've had in 9.2 weeks. So we're going to now come down here to these two fields. These two up here that I just talked about are the actual averages, and these two fields right here are those areas where you want to now forecast forward for the remaining 42 weeks, it's roughly a little over 42 weeks of a year, what your performance is going to be like. Well, we've been averaging 27.74 points a day on our winning days. I'm going to put that at 27.7, and our losing days are averaging 23.28. I'm going to adjust our losing days to minus 23.3. Okay. The important part here, the most important part of your day after trading, is making sure that your forecast is based on the actual run rate. Now, why don't we just have it automatically plug in? Because I want to know what my run rate is. I have some other factors that I know that, maybe when I was first starting out, I didn't feel comfortable with what I was doing. And maybe my more recent profit performance is better than it was when I first started out. So I can look at all of these factors and I can adjust my future forecast accordingly. In my case right here, for the example for all of you, I'm going to put my future forecast pretty much right on, spot on what my actual performance has been. Now, all of this is based on limiting the number of trades to a maximum of 3 contracts. As the account size grows, the number of contracts will increment and scale up, indicating that it's time for me, based on the account value, to trade more contracts. There's 2 limiting factors in the number of contracts that are being traded. One is we will not trade contracts that equal more than 10% of the balance of the account. Each contract requires $500 of margin. So at 10%, I need $5,000 in the account to open 1 contract. I would need $10,000 in the account to open 2 contracts. I would need $15,000 in the account to open 3 contracts. 3 contracts requires $1,500, and $1,500 is 10% of $15,000. So that's the first limiter. And without the second limiter, the number of contracts will just continue to grow as the account grows. But there are a lot of people who aren't comfortable just letting it grow to, at a unending rate. Might grow to 100 contracts, could go to 200 contracts, depending on how well you're doing. Well, there's a practical limit here, I think, for each individual retail trader too, And so what we've done is we've presented a scenario in the personal trading plan that caps the maximum number of contracts at 3. You can certainly change that to whatever you choose, but if we forecast forward based on our current run rate on both profit and losses, and we trade no more than 3 contracts going forward, our 12-month income is $257,693. There's no guarantee of that income. It's all going to be based on what your averages actual are, how you build your forecast, how many contracts you decide that you want to cap out at. But this account starts with $5,000 and has a projected 12-month income of $258,000. That, to me, is a very, very solid number. And if you are more conservative, you want to cap out at only 2 contracts, well, there you go. You can cap out at 2 contracts going forward and still have $180,000 income. You can cap out at 5 contracts, knowing that it will never get to 5 contracts unless there is sufficient funds in the account for those 5 contracts to be no more than 10% the balance of the account. And there's a $400,000 income. So you can adjust what your future forecasted income is simply based on trading the number of contracts, as long as you are honest and realistic about your forecast being based on your actual run rates. Okay, so that's in the all signals category from 9:30 to noon. Now, in the trend bias and trend consensus category only, we had on Friday, we had 50 points. We had 50 points at $20 a point. That's $1,000. That was on Friday. So we had $1,000 of profit, and we had 3 contracts, so we had $3,000 of profit. We did 13 trades at 3 contracts per trade, so that is 39 contracts. Okay, once again, Monday was a market holiday, so we're going to put 0 contracts in, nothing in the profit or loss field. We're going to just put 0 contracts in, and that zeroes that out and does not factor into our averages. So now it's Tuesday, September 8th, and we ended up at 11.5 points today. 11.5 points. At one point we were up over 50 points. So 11.5 points at $20 a point is $230, and we're trading 3 contracts. So we had $690 of profit today. And we did 19 trades. That's a lot of trades to only come up with $690. But we had 3 contracts per trade, so 57 contracts. Okay? And so that gives us a net of 7.7 points for the day, $462 for the day. And here's the most important work that we need to do. Our average production on the winning days is 34.17. So I'm going to adjust, although it's a small adjustment, I'm going to adjust this down to 34.15. Just try to get it as close as possible to our actual average. Our actual average on losing days is 18.41 points. I'm going to leave that alone because we are really right on pace. We're just partially into week 9. We've had 8 losing days in 9 weeks, not a full 9 weeks. So, sorry, not a full 10 weeks. So I'm going to leave that alone. That's actually ending up being a conservative forecast. I'm going to leave the number of contracts at 3. And so that says that if we take the trend bias trades from 7 to 4, and we also take the continuation trades from 7 to 4, that starting with $5,000, the 12-month forecast is a $364,671 income potentially over the course of 12 months. Again, you can play around with the number of contracts. You could reduce it to 1. Maybe you never want to trade more than 1 contract. Well, you could earn $162,000 potentially. Maybe you want to be more aggressive and say, listen, I know that it's capped at no more than 10%, so I'm willing to trade 10 contracts and I want a 7-figure income. This is entirely up to you to decide. This is your trading business. Like any other small business, you're going to make decisions about what you desire as your income, how you're going to achieve that, and always being honest with yourself that you are using factors that are realistic. The more data we collect, the more data we accumulate, the more days we have in our history, the more likely it is that you have a very solid run rate that you can use to project going forward. So based on 3 contracts, $364,671 potential income. I'm not guaranteeing that. I'm just saying potential because there are a variety of things that can affect your actual run rate. Maybe your run rate drops, maybe the number of losses increases, but bottom line is you're building a tool for yourself here that will help you understand as a trader what you could potentially make over a 12-month period. Last thing, I'm just going to jump back over to the averages. The 2 categories I just talked about were the trend bias and continuation over a 61-day period, 61 trading days. So that's 3 months. We're averaging about 34 points a day, just over 34 points a day. That's a very solid average and right in line where our average is in our future forecast. Based on a 61-day or 3-month time frame, the 9:30 to noon all signals is averaging 22.5 points a day. And let me see, what did we put in there? 22.5 points a day. And we have our forecast based on 27, 23. Well, the actual average, if we net together the wins and losses, is 14.64 since we started 9.2 weeks ago. So we'll keep an eye on that and we'll see how that continues to perform. But we're at a pace actually that's ahead of what the 60-day average is, so we'll keep an eye on that. And the one category that I'm keeping very close track of also is the 7 to 4 all signals. We stack ranked several of the categories. How many negative days has each category had? What is the total points in each category? What is the win-loss ratio in each category? And then we added up the ranking values of each of those, methods and timeframes that we track. And the total accumulated value, the one with the lowest value, is, in our interpretation, the optimum approach to trading. Because in this case, trading from 7 a.m. to 4 p.m. Eastern, taking all of the signals and looking for 10 points of profit on each, possibly locking in 5 points as you go. It has the lowest number of losing days. It's only had 3 losing days in 61 days. It has the highest point production of all. Now that you do see one up here that's higher than that, but I'm not counting anything prior to 7 a.m. That's a 3 a.m. category. So I'm not counting anything that is prior to 7 a.m. So anything that starts at 7 a.m. or after, that's the best point production. And in terms of win-loss, it ranks number 5. But you can see in the win-loss categories that 72.6% win-loss, you know, we're within a couple of percentage points. These are all like in the low to mid 70% range in terms of win-loss ratio. Well, you know, we've got other categories that are in the 43% or 37% range or 50% range. So when I look at all those factors, the optimum category to be trading is really 7 to 4 all signals. Now you might not want to do that. That requires a time commitment that you might not be interested in committing to. So you pick and choose based on what we share with you. Pick and choose how much time you have that you're willing to devote to trading, and you trade, you track, and you record, and you look at what your future income forecast is based on the trading plan. Putting together the adaptive entry system tool right here, the very simple signals, and pairing that with the personal trading plan where you can see what your actual performance is as well as your future forecast, is the best combination of factors any trader could ever want, in my opinion. Now, if you have some things to learn, we can help you with that. We can put you through some education courses. We can support you here in the live trading room. We can do whatever, pretty much whatever you need in order to help you learn options trading and or futures trading. But at the end of the day, the two most valuable tools you need for your trading business are the adaptive entry system and the personal trading plan. And we're going to continue to do this at the close of each market day. Just summarize what the day was like, whether it was a winning day, a losing day, and we're going to take a look at our averages, and we're going to adjust our future forecast to be in line with our averages so that we have a very realistic view of what our income could be over a 12-month period. So sincerely appreciate you paying attention, you having an interest in trading along with us. It's an honor to be able to help you, guide you, and show you how to achieve success. And we look forward to being back here with you in the live trading room tomorrow. Those of you who are just listening in to this as a recording, think about checking us out even just for a week in the live trading room, and come in and join us and see what we can help you with.